Hey everyone, it's Moaeez Rehman here, team leader of the Moaeez Rehman real estate team. I hope this video finds you doing well, and I hope you're ready because we have a ton of information and we're answering all of your most common asked questions over Instagram over the past few days. Now with me is Aubrey. Aubrey is a powerhouse. The amount of times I've had individuals DM me and say, oh, you know Aubrey too? We love Aubrey. We love his content. It's crazy. So today we brought him on. Aubrey, thank you so much for joining us. I have a ton of things to ask you, so I'm going to dive right into it. First and foremost, how is the market on your end in terms of mortgages, pre-approvals, applications? And are you seeing a shift in activity, and which way is the shift going?
Great question, Mo, and thanks for having me on. So, as we all know, we did see a bit of a downward trend after February, March, but over the past couple of weeks, I have seen it picking up, especially on the buyer side, people getting more comfortable and confident in the market, getting their pre-approval, getting all their finances ready in order to buy. So I definitely seen that pick up in buyer confidence and buyers in general.
When you have your conversations with these buyers, are you able to kind of figure out what changed, right? It was buyer beware, don't buy, market's just going to see the worst correction it's ever seen or crash it's ever going to see. And a lot of the buyers that I was working with, I'm sure yourself as well, they just wanted to see what's going to happen. So what changed from that mindset to now where they're like, okay, I'm ready to go out, get approved, and then go get a deal?
Great question. A few of them that I have spoken to have told me that they were, number one, surprised and shocked when the initial interest rates started to increase, and they are looking to buy a home, so they have gained the confidence. Whether that's because a few months have passed on, or that shock has worn off, I'm not entirely sure. But people are realizing that the sky's not falling. Real estate has corrections. It's part of a healthy market, and that's no reason to stop your search to buy a home, especially if you're looking to buy for you and your family to live in.
Right. And I'm going to chime on that a little bit as well. I know it's your interview, but I just want to share 2 cents on it. A lot of the feedback that I'm getting now is that, Mo, the market has corrected. And we're seeing so many deals. We want one of those deals that your client got last week, so we're ready to go there, right? And they're beginning to see the signs. So I saw signs of activity change 2 weeks ago, where every offer I put was at least up against 5 to 8 other offers on one single home. And then the homes that I had listed for sale automatically started getting 8 to 15 showings a week. And it was just like this, like it was very, very quick. And I shared that with my audience. A lot of people hated me for it, but a lot of people were like, okay, like we've been waiting for this. I feel like the correction is done. It might be going back up. Rents are also very high. I might as well try to get myself a deal in home ownership, right? Now, is it true that some of the interest rates or some of the lenders have reduced their fixed rate?
That's entirely correct. Yeah. So a lot of people think fixed rates and variable rates, to kind of gather them in one pot, but they operate independently. So fixed rates have gone down, not a huge amount, but I would say between 0.5% to 1% across the board for different lenders on their fixed rates. And that's due to the bond yield, the Canada bond yield decreasing. So yes, it has decreased over the past month or so.
Is that just because of the bond yield, or do you think it has any sort of effect on the fact that, okay, interest rates are coming down, it's going to get hot, we definitely got to buy now?
It's hard to say. Each bank acts independently. There's many factors. I know that is one of the determining factors, but it could be due to several things. So you're probably right.
Is it all possible? It could be because of like the number of loans that are being funded has reduced substantially since, let's say, last year?
It could be. I don't think the like between you and me, I don't think the banks raise and lower the rates based on that at all, or too much. Like, they're going to be successful no matter what. They're, especially like the big 5 banks, CIBC, Scotia, TD. So I think it's more complex than that. But then again, it could be one of the factors. So I don't really know 100% why they've done it. What we do as mortgage brokers is we watch the bond yield, and usually it does correlate. If the bond yield goes down today, maybe a week or two after, there's a lag, and then they eventually drop the rate. So that's what I've seen, but it could be due to a few things for sure.
Beautiful. I love that. Aubrey, when is the next Bank of Canada meeting? And recently, we saw a report where it said Bank of Canada intends to pause the interest rate hikes. And previous to that, all the articles were leading us to believe that we should expect at least one more interest rate hike. And obviously various different factors. Some are talking about, like, everyone has a different perception as to why they believe there should be an interest rate hike, right? So first and foremost, when is the Bank of Canada meeting? And what do you think is going to happen? And I promise we're not quoting you. We just want to know what you think based off of the info you have.
Got you. So there's 3 more Bank of Canada rate announcements throughout the rest of the year. The first one is on September the 7th. And then there's one in October, one in December. At this particular meeting, we are expecting an additional increase to the overnight lending rate, which affects the prime rate and variable rate mortgages. In terms of the exact amount, we think it's going to be less than the previous one, which was a full 1%. Some banks are estimating 0.75, some 0.5. CIBC came out with a report, as you mentioned, that September is going to be the last rate hike for at least the near future. Other banks are not quite as sure. So I wouldn't, pay too much attention to the reports or the articles, because a lot of them say different things and it sort of is confusing. So ultimately, if you're a buyer and you're looking at variable rates, you should go in with the expectation that there's a possibility that it can continue to increase. So yeah.
That's good. That's a good tip and helpful advice to kind of mentally prep you so you're not caught off guard, right? A lot of what happened this year, no one really saw, so it caught people off guard, right? Aubrey, what is a trigger rate?
Great question. A trigger rate is a term in mortgages specific to a specific type of mortgage product. And that is a variable rate mortgage, a static variable rate mortgage to be specific. Some lenders offer this, some lenders don't. TD Canada Trust, for example, they have a static variable rate mortgage. And all that means is it's a variable rate where the rate can fluctuate, but the payment stays the same. Now, the payment can't stay the same forever. If the prime rate reaches a certain point where the amount of interest being charged is not covered by your monthly payment, the bank is going to ask you to make a change. And typically they give you 3 different options. You can either manually increase your monthly payment to start covering that interest portion. You can make a lump sum payment to cover that extra interest and keep your payment the same, or you can convert your mortgage to a fixed rate mortgage and stay like that with fixed monthly payments.
And do you know when homeowners are notified of such a change that could happen in their mortgage at any time, really, for that matter?
Absolutely. So I know for TD, for example, one of the banks I deal with, on the mortgage commitment letter and the mortgage loan agreement, it is specified that there is a trigger rate. They give you, I don't know how specific they are in terms of the calculation, but they do mention the general rule of once the interest reaches a certain point, there is a calculation. And Mo, I don't know if you're going to include this whole clip or not, but I don't know how confusing it's going to be, but there is a way to calculate it. You want me to share it?
Absolutely. Do you want to do a screen share or?
Yeah, let me do a screen share.
Sure. Let me give you the ability to do so. All right, buddy, you're a host now. This is very last minute and spontaneous. This is definitely not something that we plan on doing, but I'm glad you had it ready.
Yeah, of course, man. Okay. So to calculate what your trigger rate is, and what that means is, what does the rate have to go to in order for the trigger rate to be activated? You take your total annual payments. So if you pay $2,000 a month, your total annual payments is $24,000, right? You take that $24,000 and you divide it by your outstanding principal balance. So $24,000, let's say you have a $500,000 mortgage balance. That means your trigger rate is 4.8%. Once your net rate reaches 4.8%, you then get those 3 options of increase your payment, make a lump sum payment, or convert to a fixed rate term. That's a rough way to calculate what your trigger rate is going to be. But the best way to calculate it is call your bank and ask them what's the trigger rate. They will tell you the exact percentage.
Love it. And I'm glad that you have this all written down too. This is a very helpful document. If you guys want something like this from Aubrey, just shoot me an email, which is in my description below, and then I'll get in contact with Aubrey and maybe we can do a presentation on this, or he can just send you the document itself. And lastly, Aubrey, you can stop your screen share now if you want to. Perfect. What are top 3 things a home buyer can do today to get closer to home ownership if they want to buy a house?
Great question. And I would say the top 3 things are the 3 things that are needed in order to be approved, which are credit, down payment, and income. If you know your credit is low, you have to find the reason why it's low and bring it back up. As long as you're at 680 or higher, and you have at least 2 trade lines, which can be a credit card, line of credit, car loan, then you are a sufficient borrower in terms of your credit. Number 2 is your income. Are you employed or self-employed? If you're employed and you have a permanent full-time job, you're good. We can use that income. If you're self-employed, we'll need 2 years. And then your down payment. So depending on the price point that you're looking at, you'll need between 5 and 20%. So best thing to do is to speak to a mortgage broker or mortgage agent who can go through those 3 aspects with you and let you know exactly what you need to do in order to prepare and be pre-approved to buy a home.
Beautiful. Aubrey, if someone wants to get a pre-approval with you, what is the best way? What is the process? Should we do your schedule, your calendar scheduling link in my description and just reach out to you directly from there? Do you want them to call you by phone call, email? What do you prefer?
Yeah, whatever's easier. If you Google my name, all my links will pop up. You can call me directly. You can click the link and book a call with me. Everything's on my social media as well. And then we can set up a call. It takes 15 to 30 minutes to get all the information we need to do a pre-approval. And from there, within 2 to 4 business days, we process everything and you're good to go.
Beautiful. And lastly, this is for me to know as a fan, when is the next time I'm going to see you dance on TikTok?
That's a good question. You know, I've been working on my dance moves, so I don't know, whenever I learn a new one, but probably soon, hopefully within a couple of weeks.
I'll be on standby. All right, my man, thank you so much for coming. Guys, as always, if you have any questions, if you want to schedule a consultation with us, the consultations are complimentary. The whole idea of the consultation is to understand your situation, your numbers, your expectations, your vision, sorry, and then to guide you based off of what you need, because the advice caters and there's no one advice that suits everyone. So reach out to us at any time and I will see you in the next video. And until then, I'm going to grab some water. Bye for now.
Thanks, Mel.